Yesterday, the market tried to sell down when we withdrew from the deal, and it held firm. If you look at the S&P cash,
That's
which
because
is a
the
big...
market has already telegraphed.
Could have been priced in. Oil was up, but oil didn't sell down afterwards. They tried, and at this point, I don't think the market's really worried. I think maybe the market's happy that someone's taking a stand versus Iran.
Yeah.
Death to America, you saw that on their Iranian parliament. That's not a good sign. So it confirmed that they are a little erratic over there. But anyway, we're not going to talk politics. We're going to talk charts. If you look at the S&P cash, look at this chart. Okay, overall, we started the year with a nice rally. Okay, this was 2018. Look at this nice rally all the way to the top. Since then, we've been in a consolidation phase. Okay, testing support around 2,600 in the S&P, and now for the first time, we just broke above this descending channel. So this is a positive sign for U.S. equities. Yesterday, if you look at the S&P cash, here was your important spot. They tried to sell it at 2 o'clock when President Trump said he was going to withdraw, but it held here. It held the top third of this range. Here was your reversal last Thursday at the 200-day. Came up into this descending channel here and just broke above it. That's very healthy. So right now this market is in active bullish mode. So the longer it stays above here and shows commitment to this breaking of this descending trend line, okay, your next level of resistance is about 27.17. And then there's really nothing all the way up to about 27.75. So at this point, the active bulls have the ball. If you look at the weekly chart, you will see that overall, this upper flag type pattern is trying to resolve to the upside. So I would say the bulls are in more control than the bears right now.
So we see the foundation of the equities is still strong there. And how do you see the FXR? Do you explain a little bit of FXR to us?
Well, the FXI, which is a proxy for Asian equities, also looks like it's been in consolidation mode. If you look at the FXI, which is for Greater China, which is how U.S. investors invest, look how tight this is. Okay, this is a very, very tight chart right here. So at this particular point, it looks as if the FXI, which correlates to the Hang Seng, okay, is going to break to the upside. So this looks very positive for the Asian markets right here, looking as if it can get back up towards this 50 area, not even back towards the highs that we saw in early 2017. That's the weekly chart. If you go a little bit more micro, you go to the daily chart, here it is. Okay, it's just poking its head above this descending channel. Look at this. You have a high, a lower high, a lower high, a lower high. For the first time, it's trying to get above this resistance, which could be very good for the MSCI, which is the world markets, and very good for Asian equities that I do think could respond well from here moving forward.
Yeah, as you mentioned, that global investors buy the China stocks at the fastest pace ever as the MSCI inclusion draws closer. So what should investors pay more attention to at current situation, and what kind of the opportunities they should catch right now? U.S.
investors or Asian investors?
Asian.
I think Asian investors, it looks as if the Hang Seng and the Shanghai could have another move. So depending on your age, okay, and your tolerance, if you are younger, if you're 30 or under, what you probably should do is have a monthly plan. Invest every single month into an ETF that correlates to the FXI and the Shanghai, and over time, you'll have a healthy nest egg for retirement. If you trade stocks actively using technicals, for me or for you, this is a time where it does seem as if you might get a little bang for the buck with a little bit of movement, because if you go back and look at this tight chart pattern, the FXI has done a whole lot of nothing since February, March, April, May. It looks as if you're finally going to get a nice breakout move to the upside. So this would be a good spot to have more equities at work if you're a trader. If you're also a trader and you can trade U.S. equities through ADRs, there's a lot of Chinese names doing very well in the U.S. markets.
So name several of the Chinese names that you think they're going to shoot up.
Well, first, it's been Baba. Baba just reported great earnings.
But do you think it's a time to buy in now?
I still think Baba's got a lot of time left and a lot of upside left. If you look here at the chart of Baba, it's been an unbelievable mover. But if you go all the way back here, it's been in the channel. Like Baba's been, since last August, almost a year, it's done a whole lot of nothing, where it's been consolidating what was a really nice move from a year or two ago. So going sideways like this, yes, here was earnings and it responded very well. So now it seems as if it's only a matter of time, which it already did, okay, is hold above 190, clear 200, and I could see BABA this year going to at least 225 for U.S. Asian investors as well as U.S. investors. And I also like Baidu. Baidu had a very good earnings report. Baidu itself, okay, had a big gap up after earnings. If you look right here, just broke out above 255. It also has a channel going sideways where it's been consolidating a move for the past, almost 2 years. So at this particular point, it does seem if you want leadership in, ADRs that compare for Chinese names, this, Baidu and Baba, to me, are best in breed. And you have one more that's a little bit more speculative, but you could probably say it better than me. This acts very, very well, where it's been going sideways now for 3 months, and it does seem, if it reports quality earnings, perhaps it could move to the upside. So I think Baba and Baidu are a bit more quality. This one is a little bit more speculative.